What's happening, Canopy Growth traders and investors? It's Rod with Power Group. Welcome back on the Pursuit of Wealth. It's Tuesday, June 28th. Hope you're well today. And in this short video, going to be discussing the stock Canopy Growth Corporation. Going to be talking about some potential bankruptcy risks. There was an article floating around today. A lot of people were asking me about this one, so I thought it warranted a video. I'll talk about whether or not I think it's FUD or fact. Personally, I don't think they're going to be going bankruptcy anytime soon. I'm leaning toward the side of FUD. Anything's possible, though. Before we get to it, though, make sure to smash the like. Helps support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell to be notified on any future updates. We'll also do some technical analysis and my thoughts and opinions on the charts in the days and weeks ahead. Taking a look at this article. So this was originally from Seeking Alpha, and it says Canopy Growth bankruptcy risks are growing. When we last covered Canopy Growth Corporation, we did not expect it to be around its current form within 2 years. And I'm not going to go into this whole article. They actually block it out if you're not a member. Seeking Alpha, that's super frustrating. I don't know why some of these websites are doing this, these publishers. In my opinion, it's, I saw Joe Rogan talking about it as well. He's like, we're not going to pay for your article. Like, just give us the information. A little bit ridiculous. And again, they're not even allowing it to be public. So again, that's a little bit of a sketchy way of doing it, right? If you're going to say it's bankruptcy risks are growing, like, don't make us pay for that, right? Like, that's just, I lose a lot of respect for publishers that do that. Let me know in the comments below if that aggravates you, but no, I'm not paying for the article. And that's why I think it's more FUD related as well. We didn't really have any other, publishers or analysts really covering that as well. I mean, we know that, Canopy has been losing market share to Tilray and Hexo and Organogram. It's been dropping in the ranks. This is from High Fire. You can see Canopy Growth coming in at 26.3 million for the sales in April. Again, this is unadjusted, so gross, but really, really taking a hit in terms of market share. And if we take a look at their current market cap, it's 1.869 billion, which is much lower than Tilray at 2.144 billion. So now, once upon a time, CGC used to be the king in the space, right? It used to be the leader and the one that we would use as a benchmark. But now it has since been it's since changed to Tilray. I would say is the biggest, right, that we should be tracking going forward, because we know that Tilray is now Tilray and Aphria, and they're also partnering with Hexo and Redecan essentially. So it's essentially Team Tilray, Aphria, Hexo, and Redecan. So again, it's not looking like Canopy's market share is going to improve anytime soon. So I would agree that there's some challenges ahead, but to just say that there's bankruptcy risks growing when the sector is at 52-week lows and a lot of names are at all-time lows, and not even giving the article for free and making us pay for it, very, very frustrating. And just, you start to question how manipulated and how the ethics and morals of some of these companies. If you're going to drop the B word, at least make it publish it, make it free to the masses and widely accessible. Don't make us go signing up for an account. It's just very frustrating. Let me know in the comments below if you agree with me. But also, MJ producer Canopy Growth sheds 8% of the workforce, so they cut about 250 jobs, and that was going to save about 150 million in savings, which obviously hasn't hit their books yet. I mean, they've got a lot of really great assets. They've got a lot of really great brands. They've got multiple different, CBD businesses, stores, and Bickle. So again, they have tons of assets. There's no way that they're going bankrupt anytime soon. The same thing happened with Hexo. They said Hexo was going bankrupt. I did a video on that and list like 8 options that they had before going bankrupt. And Canopy Growth has the same thing. They could do leasebacks. They could, sell some facilities and then lease them back and then rent them, like sell it to a REIT, right? Like an IPR or something like that. They could sell off some brands. They could sell off some parts of their business. There's tons of things that they could do. They could cut more jobs. There's so many, they could get, I'm not going to go into all the different possibilities, but you start to get my drift, right? There's a long ways away. There's a long road ahead before we contemplate the B word. And the savings, this isn't just Canopy either. We know that Aurora sheds 12% of its workforce amid reorganization, the company said, and Hexo did the same thing as well. And we're just seeing this across the space, right? There's even companies in the U.S. that are laying people off in effort to save some costs, right? So this isn't just isolated to Canopy. It isn't just isolated to Aurora. It's the whole sector. And right now, the market conditions are terrible for MJ. And if we take a look at the CGC chart, we'll do some, and this is on the NASDAQ, so all prices mentioned are in USD. But we are potentially looking at a weekly bear flag here. Anything under 438 on CGC is a potential for a weekly lower high and bear flag. And if we do if we don't manage to get above that and we do confirm this weekly bear flag with a break of 324 support, that's when we're going to confirm the weekly bear flag. If we lose 324, we're targeting a move down to around the 233 area, the 230 on CGC. And you just take this measured move from the high to the low, and then you take a measured move from the 0.32 fib, and that takes us down to around that 233 area. So if we did see that confirm, that means we could drop about another 35% from here. And as we know, all MJ across the board really is down 80 to 90% plus from the highs of February 2021, so about a year and a half ago. Right now, we're down at almost 95%. So again, it's hard to imagine us dropping more. Look at that monthly chart. That is the ugliest chart. We had a monthly bear flag confirm. Man, that's one of the ugliest charts I've ever seen, right? It's been a brutal market, and it's been a brutal couple years, and I know that people are frustrated. They're getting investor fatigue, and there's just, not really anything on the horizon in the short term that's really making us bullish. There's the potential that we could see more weakness in the broader market, in the S&P 500 as well. But as we know, once something like safe banking gains any traction at all, these names could easily jump 100, 200, maybe even 300%, in a couple of days, right? If we get any kind of movement on that. And we know that we're starting to see U.S. legalization pick up into the fall as well. We have the midterms coming up, and the Senate, the Democrats are going to try to keep control of the Senate, right? So they may even use that narrative and move along some sort of reform in effort of gaining some of those votes back. Not going to get political, but that's just something we need to be aware of as a possibility. We're also close to monthly oversold here on CGC. If you look at that wick, we basically would have touched down on monthly oversold, but let's just say we do go to that 233 area on CGC. That would still only put us down about just under 96% from the highs of February 2021. So is it possible that we go there? Absolutely. Tilray, from its high of 2021 to current levels, is down about 96%. So if Tilray's down 96%, it's entirely possible that CGC's heading there as well. Again, all the signs are pointing that there's a lot more trouble ahead. They're not forecasting profitability until maybe 2024, 2025. But we know that if any kind of U.S. legalization progress happens, Canopy's set to acquire acreage, right? And then Tilray MedMen. And then they would essentially become an MSO, right? They would have all of Canada, and then they would be focusing on the U.S. as well through acreage, right? And that could be a catalyst that could really turn things around, right? So again, not saying there's not going to be challenges, but to be just dropping the B word right now. I mean, obviously they have some financial challenges. They're cutting their workforce. Their gross margins are terrible. But you got to keep in mind, like, LPs are not only preparing for international markets, the Canadian market, they're also building the foundation for the U.S., right? And Canopy's more focused on the U.S., I would say, out of any LP. And that's what's that going to mean for the short term? That's going to mean increased costs and not that great gross margin or profitability, right? Because they're planning for the future, something that isn't even legal there yet. So they're focusing on, CBD and hemp. So kind of similar to what Hexo's doing as well, right? As we await federal legalization. But SPY closed near the low of the day today, and we could potentially see more downside into tomorrow after that week close. And if that happens, that could result in more weakness as well in some of our MJ names. We also have some pretty big economic events happening tomorrow. We got some GDP, Fed Chair Powell speaks. So this could be some turbulence for the markets tomorrow. And obviously, if we see weakness in the broader market, that's going to translate into weakness into MJ. We do have some MJ names, though, in daily uptrends, like Tilray is in a daily uptrend, while SPY the S&P 500 has yet to confirm a daily uptrend. So Tilray, some notable strength there. So it's not all doom and gloom at the moment, but CGC definitely lagging here. On the weekly time frame, though, it's not looking too bad. We are starting to see a bull cross of the stochastic and the MACD here on CGC, and we have the 10-week moving average there at 467. We also have the 50-day moving average at 491. So we could easily see a move up to that area into the high $4. Again, this is all US dollars. Charting on the NASDAQ. We did have a death cross on CGC back in the last summer, around a year ago, and pretty much all MJ did, right? And if you exited just on that warning signal alone at $25, here we are down around $3, right? So that was the warning sign. We also had the S&P 500, the tech sector, crypto, all confirming death crosses with the 50-day crossing down through the 200-day, which we refer to as a death cross. So all the writing was on the wall and the warning signs, everything that we needed to expect more downside. And we even had a bear cross of the weekly moving, the weekly moving averages here, the 50 and the 200 weekly, which is perceived as extremely bearish, right? Because on the daily time frame, that's a death cross rather, and when it happens on a macro level time frame like the weekly, that's even worse. So in terms of the weekly chart, like I said, MACD starting to look promising, and just really questioning how much more downside we're really going to see from here. Like I said, that weekly bear flag is going to be something we're watching for as well. So we'll be watching for key support at 324. If we lose that, confirm the weekly bear flag, and we're likely going down to the low twos, somewhere in that 233 area. All right, hope you found value in this video. If you did, you can share it with anybody who also may find value. If you could like the video, it helps support me in the channel. It doesn't cost you anything. You can subscribe, tick the bell, you'll be notified on any future videos as well. Thanks again for joining us on The Pursuit of Wealth, and we'll see you in the next video.